The annual rate of consumer price inflation dropped to 10.7% in November from 11.1% in October, the Office for National Statistics said, a bigger fall than the decline to 10.9% which economists had forecast in a Reuters poll. The United States and the Eurozone have also reported larger than expected drops in inflation for November. Prices are still rising, but by less than this time last year, with the most notable example of this being motor fuels, ON's chief economist Grant Fitzner said. Like other central banks, the BoE is battling inflation that is far above its 2% target, and it has raised rates sharply over the past 12 months, including a 3/4 point rate rise in November, its biggest in over 30 years. Economists mostly expect the BoE will raise rates again on Thursday to 3.5% from 3%, despite the BoE's own forecasts that the economy is heading into a long recession. Inflation in Britain is higher than in the United States or the Eurozone as a whole, though below that in Germany. The Bank of England has been left in a difficult spot, and its policymakers are increasingly divided on the right response. Unfortunately for the UK, the economy is being hit by US-style wage pressures and a European-style energy crisis, all at the same time, said Hugh Gimber, global market strategist at JP Morgan Asset Management. Paul Dales, chief UK economist at Capital Economics, said the latest data reduced the likelihood of rates peaking as high as his previous forecast of 4.5%. Thursday's decision is likely to see another split vote by BoE officials who disagree on the extent to which a recession will cool price pressures and how much of the impact of past rate rises is yet to be felt. British inflation began to pick up last year, driven by post-pandemic bottlenecks in the domestic and global economy, and accelerated when European energy prices surged after Russia's invasion of Ukraine in February. Last month, the government's budget watchdog warned of the biggest squeeze on living standards since records began in the 1950s, and the BoE does not expect inflation to return to target until early 2024. Price rises have been concentrated in areas such as food and energy, hitting those on low incomes the hardest. Finance Minister Jeremy Hunt said it was vital that we take the tough decisions needed to tackle inflation. Britain faces a wave of industrial action, especially in the public sector where pay has not kept up with the private sector or with rising prices. The BoE has said labor shortages as well as trade and migration frictions due to Brexit have helped to push up prices. The breakdown of inflation components in Wednesday's report offered mixed signals on how fast inflation is likely to fall.
What to expect from the Fed meeting? The Federal Reserve is expected to raise interest rates by 0.5 point at the conclusion of its two-day policy meeting on Wednesday, an indication that the central bank is pulling back on its aggressive stance as signs begin to emerge that inflation may be easing. Although that increase would be smaller than the 3/4 point hikes announced at the past 4 Fed meetings, it's nothing to scoff at. It's still double the Fed's customary 1/4 point hike, and a sizable increase that will likely cause economic pain for millions of American businesses and households by pushing up the cost of borrowing for homes, cars, and other loans. The Fed's anticipated action would increase the rate that banks charge each other for overnight borrowing to a range of between 4.25% and 4.5%, the highest since 2007. Federal Reserve Chairman Jerome Powell confirmed last month that smaller rate hikes could be expected, saying, "The time for moderating the pace of rate increases may come as soon as the December meeting." The latest inflation reading, as measured by the Consumer Price Index, showed year-on-year price increases slowed to 7.1% in November. But inflation is unlikely to slow dramatically anytime soon, partly due to continued pressure on wages amid a shortage of workers. Yet Wall Street appears to believe the Fed will eventually be forced to pivot away from or even reverse its regimen of rate hikes. Traders are largely pricing in rate cuts in the second half of 2023. The Fed will conclude its rate hike regimen by the second quarter of next year, predicted JP Morgan analysts in a recent note. With inflation continuing to fade and fiscal policy likely on hold, the Fed is likely to end its tightening cycle early in the new year and inflation could begin to ease before the end of 2023, they wrote. The analysts expect 2 quarter-point hikes in the first half of 2023. But the average period between peak interest rates and the first reductions by the Fed is 11 months, which could mean that even if the central bank stops actively hiking rates, they could remain elevated into 2024. Investors will closely read the Fed's economic outlook, the summary of economic projections, which is also due out Wednesday. And they will watch Powell's press conferences for clues about what's to come, though they may end up sorely disappointed. We expect Fed Chair Powell will insist on the need to hold policy at a restrictive level for some time to bring inflation down toward the 2% target, wrote Gregory Dacko, chief economist at EY Parthenon, in a note to clients Monday. This will serve to push back against current market pricing. Powell will stress that history cautions strongly against prematurely loosening policy. The Fed has increased its benchmark lending rate 6 times this year in an attempt to discourage borrowing, cool the economy and bring down historically high inflation that peaked at 9.1% over the summer. Even if interest rate hikes do ease off, they will remain high, and economists are largely expecting that the U.S. economy will endure a recession next year. Powell said in November that there is still a chance the economy avoids recession, but the odds are slim, noting, to the extent we need to keep rates higher longer, that's going to narrow the path to a soft landing. In an interview that aired on CBS on Sunday, Treasury Secretary Janet Yellen, Powell's predecessor at the Fed, said there is a risk of a recession. But it certainly isn't, in my view, something that is necessary to bring inflation down. And the economy has so far withstood the Fed's aggressive rate hikes. The job market is healthy, wages are growing, Americans are spending and GDP is strong. Business is also good. Companies are largely beating revenue expectations and reporting positive earnings results. The Fed isn't acting alone, it's just one of 9 central banks expected to make a rate announcement this week. Landing softly on the ever-narrowing path between high inflation and recession is a global concern as central banks across the world contend with similar economic problems. The European Central Bank, the Bank of England and the Swiss National Bank are expected to follow the United States with half-point moves of their own on Thursday. Norway, Mexico, Taiwan, Colombia and the Philippines will also likely increase their borrowing costs this week. The Federal Reserve announces its rate hike decision Wednesday at 2 p.m., followed by a press conference with Chair Powell at 2:30 p.m.
Stephen, Twitch, Boss, DJ for Ellen DeGeneres Show, Dead at 40. Stephen, Twitch, Boss, the amiable DJ for Ellen DeGeneres Show, and dancer who rose to fame on So You Think You Can Dance, has died. His wife, fellow dancer Allison Holker Boss, confirmed in a statement to CNN. He was 40. It is with the heaviest of hearts that I have to share my husband Stephen has left us, Holker Boss said in a statement. Stephen lit up every room he stepped into. He valued family, friends and community above all else, and leading with love and light was everything to him. He was the backbone of our family, the best husband and father, and an inspiration to his fans. To say he left a legacy would be an understatement, and his positive impact will continue to be felt, she added. I am certain there won't be a day that goes by that we won't honor his memory. We ask for privacy during this difficult time for myself and especially for our 3 children. She added, "I am certain there won't be a day that goes by that we won't honor his memory. We asked for privacy during this difficult time for myself and especially for our 3 children." Holker Boss concluded her statement by saying, "Stephen, we love you, we miss you, and I will always save the last dance for you." He was mourned on social media Wednesday by many who shared videos of him dancing in their memories. "A kind soul and a sweet person. That is how I will remember Twitch. This was his 40th birthday party. My heart goes out to his family, especially Allison and their beautiful kids. This is devastating. I love you, brother, and will miss you dearly," daytime TV host and comedian Lonnie Love tweeted. Born in Montgomery, Alabama, Boss earned his nickname as a child when he couldn't sit still. He graduated from Lee High School in Montgomery in 2000 and went on to study dance performance at Southern Union State Community College and Chapman University. 6 years ago, he spoke with author and former football player Lewis Howes for the latter's podcast and talked about his background, including being raised by a single mother and how his relationship with his absentee father helped shape him. "I have always been that type. Don't tell me what I won't do," Boss said. "I remember talking to outside of his work in the parking lot and telling him, 'Hey, I'm joining the dance team. I'm going to need some shows and some money to get supplies,' and he went on this tangent. I was like, oh, that means I'm really supposed to do this then." In 2003, Boss was a semi-finalist on MTV's The Wade Robson Project, and was also a runner-up on the television talent competition, Star Search. Becoming a runner-up on So You Think You Can Dance in 2008 marked the beginning of his rise to fame, and he would later return to serve as a judge for the dance competition. Elle DeGeneres brought him on as the DJ of her popular daytime talk show in 2014, a job he held until the show went off the air this year. Boss was also a CO executive producer of the show. He stayed in touch with fans via his popular social media accounts, often sharing videos of him dancing with his wife. The pair were all-star dancers on Season 7 of So You Think You Can Dance in 2010 and connected romantically. "We shared a dance at the wrap party of that season of So You Think You Can Dance, and we have been together ever since," Boss told People in February. "There was no dialogue, there was no conversation or a first hangout. Literally, we danced and we were together holding hands the very next day," Holker Boss added. "And we never looked back." The pair are the parents of 3 children. Boss's final Instagram post on Monday showed him and Holker Boss dancing in front of a Christmas tree,